Okay. Hi there. This is David Gemme coming to you from beautiful Lake Tahoe, as you can see in the background here. And today I have
Tally
Tally,
Leontovich with Heffernan Insurance Brokers.
good, and Grant.
Grant Stagen with the Greenspan Company Adjusters International.
Great. And today what we are going to cover is we're going to cover this crazy topic of insurance because the insurance industry right now is being turned upside down in California, and I think Nevada is starting to also, right? So,
Correct.
Tally, why don't you give us a brief introduction about what your company is and what they do? And Tally is the person that I send most of my clients to in Lake Tahoe if they're looking to insure their house. Go ahead, Tally.
So my name is Tally Leontovich. I'm an insurance broker. I specialize in personal lines and placing homeowners insurance. I've been doing this in the Lake Tahoe region since 1996. My background is AAA, Wells Fargo Insurance, and Sierra Insurance, and now Heffernan Insurance. We are one of the largest privately funded insurance brokerages in California. We have tons of insurance appointments, but unfortunately in California, all those appointments don't mean much since many insurance companies aren't even offering property coverage in California anymore.
I know it's crazy. We'll get to that in a second. Grant, what do you do?
Yeah, I'm a public adjuster with Greenspan. I help homeowners and businesses prepare, present, and negotiate insurance claims. So when things get sticky, we're typically brought in to help level the playing field between them and the insurance company.
Got it. Right on. Okay, so we're going to just jump right into this because this is a big topic and we're trying to keep this video under 30 minutes, okay? All right, Grant. So what are the consumer's options for procuring insurance in California today? Tally, why don't you take that one?
There aren't very many. I mean, most of the insurance companies that you know of, Allstate, State Farm, Nationwide, Hartford, they're all closed to writing property in California. And then the few that are still writing aren't even interested in helping anyone in an area where there's a risk of wildfire. So we're limited to Cal Fair Plan, which is an insurer of last resort. There are some new small pop-up companies with some capacity and financing to take on wildfire risk where they feel like they've pulled out the correct formula to get it done, but you've never heard of them before. Or we go in non-admitted markets, and those are insurance companies that are outside of California or the United States that have capacity and capital to take on the wildfire risk.
Right. And having recently gone through this myself by trying to insure my house up here, Tally can attest it was a total pain in the ass to insure my house. So,
Absolutely.
we're going to cover why that is later on. Grant, do you have any insights on this?
And not a whole lot. I mean, Tally's better equipped for that answer. What I would say is, imagine how difficult it is trying to find insurance right now. What I see on my side once there's a claim is, okay, if this person does have insurance, a lot of times it's not adequate, and that's because the insurance company isn't even offering uh, the the right amount. Because if they don't want the exposure to begin with, if they're not going to get the right rate, if a house should be insured for, let's say, $2 million, they may only offer 1.4 on it. I've seen that many times, and there's a number of factors there. But so, if it's very difficult finding insurance now, imagine how difficult it is to collect something from them once you have a claim.
Well, that's been my main concern is like standing in a DMV line with Cal Fair Plan if the house actually does burn down, right? Like how accessible are they going to be when it took us, Tally, we worked for what, 2 months trying to get insurance on my house?
Yeah, and I'm going to piggyback on what Grant was saying. I mean, I have never seen it be so difficult for people to get paid out on their insurance when they have a claim as I have in the last few years. It has gotten more difficult every year, and I cannot believe how hard people have to fight to actually get what they're entitled to from their insurance company. And it's not just with the Fair Plan. I'm seeing it across the board with every single insurance company. If
And
they
is
can
this
find a
coming from a
reason not to pay,
legislation perspective? Like, is California creating such restrictive legislation that it's actually causing the insurance companies to be that way? Or is it coming from internally in the insurance companies because they've had so many claims between the floods, the, snow, the, fire, et cetera?
from what
I
I, oh, go
Yeah,
ahead,
go ahead.
Grant.
Okay, it's a combination. Look, the Department of Insurance, there's a lot of work that needs to be done on that end in terms of bringing carriers back to the marketplace and having it be more competitive. On the claim side, I don't think that has a lot to do with legislative affairs. insurance companies, rightfully so, are for-profit companies. They're allowed to make money. Then again, if they can save 10% here on this line item, or 20% there, they're going to try and do that as well. So everybody's just tightening up their belts right now. The cost of construction is outrageous, and insurance companies know that. I think, David, when you and I talked before, it's more expensive to build in the Tahoe area than it is in Sacramento, California, right?
Yeah.
It's just the landscape, the weather, everything. So insurance companies, they're terrified up there, right? So
yeah.
And if they're going to save money, they're going to try to save money.
Right. I mean, we just insured my house at $800 a square foot, which is probably the bare minimum that you could possibly insure for up here to replace something.
Absolutely.
Yes.
Did you have a comment on that?
Well, just piggybacking on what Grant said, that it is coming down to profitability, and that's what insurance companies have been saying. They're not making any money in the state. And until they can get the rate increases they've been asking for, we're not going to see the market recover. And a lot of it is legislative based because there's rules in California that prevent insurance companies for asking for rate from certain criteria that's affecting their bottom line, specifically future forecasting for climate change, because you can only get rates based on your experience, which isn't reflective of what's going on in our climate and our world now with all the catastrophic disasters. And reinsurance was the straw that broke the camel's back. The reinsurance companies jacked up their rates incredibly last year, and California insurers cannot use their reinsurance rates as a reason to increase rates to the consumer.
Right. And that's horrible legislation if you think about it, because if we had more competition in the marketplace, rates would naturally adjust, right? That's my own perspective on it.
Well,
right?
and I was going to say, the insurance commissioner, a few months back came out with this big plan, and everybody was kind of optimistic about it. Some of this is going to work. Nothing's been done.
Yeah.
And it was lip service.
Yeah, I posted on my
Politicians.
Facebook page a couple weeks ago, the guy should just resign. He's not doing anything to help this state, Okay, next question. What are the steps that a homeowner should take to protect their home and actually procure insurance? Are you guys seeing a list of requirements that we have to meet? Why don't, Tally, you take that, and then Grant, you take it from the other side.
Well, the market is so depleted right now. There's just not much. I mean, people have done the defensible space work, they've done the home hardening work, but it's not changing eligibility at this point. It's something that will change in the future. Once we get an adjustment to the insurance market, insurance companies start coming back to play, they're definitely going to be wanting to take on the risks that have done the defensible space and home hardening. There's tons of information out there on what to do on home hardening. If you're planning a remodel, if you're planning to do anything on your home, make home hardening part of the equation. It will help you with your rates and will help you procure insurance in the future.
Yeah, Grant?
I agree. There's a number of companies out there. I will shout out Allied Defense. They're a really good company. They've helped a lot of my clients before fire, after the fire. A lot of sprinkler systems, multiple layers of defenses, FOS check, invisible fire retardant. So there's a lot of options. I just, investing all that money and hopefully seeing it pay off, that it's a tough pill to swallow, right? Because I do know somebody who spent tens of thousands of dollars doing all of that, and they still had to go with Fair Plan. It's too bad.
Well, that's my story. What, 2 years ago, Tally, we spent $7,000 on my house getting it fire ready, and we had great insurance for like a year and a half, and then the company pulled out this year.
Yeah, that was a wildfire mitigated homeowners policy, and they
Right.
ended the program. They're non-renewing everyone this year, but they did have huge mitigation hurdles you had to get through. And they have a non-admitted program, but the price is not great for a lot of people, especially in our region.
I think I got quoted $21,000 or something like that for a 2,000 square foot home.
Yeah.
I was
And I would also say what Grant was saying, there's another great company that out there for home hardening, Ember Defense LLC.
Yeah, I see. I know you guys, I think at Heffernan, I've seen Liz use them for her winery book of business.
Yeah.
So out in the Napa area. They're great too. I would say, just quick little facts, when you were talking earlier about the marketplace, Tally and David, you were asking what's out there. I attended something the other day with the CEO of California Fair Plan, and then she put these slides up on the wall. Truckee alone has a $4.1 billion with a billion dollar exposure. Grass Valley, 3.1 billion. Nevada City, $2 billion. Sonora, $2 billion. Twain Hart, $2 billion. You could go down to Lake Arrowhead and Bear Lake down in Southern California, $8 billion and $6 billion respectively. California Fair Plan's one disaster away from going bankrupt. And it's becoming the insurer of choice, not for agents and brokers, not for homeowners. It's been pushed to everybody because all the carriers are leaving the marketplace. And just so you know, they're getting 1,000 applications a day, and they don't have the infrastructure to handle that load. They don't have the infrastructure to handle the claims. And that's why Tally was saying, it's really hard to get them to pay. And it's not just them, it's all insurance companies. But the talent that's out there on the carrier side and the investment they've made to deal with claims is lacking. And so it all falls on the homeowner, the business owner, us as public adjusters, brokers who get involved. It's really difficult out there. And again, I think it's just important that we let people know that Fair Plan has this huge exposure, and they're just one wildfire away from completely going bankrupt. And it's a problem. We're not Florida yet. Florida is a whole nother beast, but we're getting close.
And Grant, correct me if I'm wrong, but when the Cal Fair Plan does go bankrupt, the unpaid claims are going to be assessed against all the insurers that provide insurance, home insurance in California.
That is my understanding. That is my understanding. It's going to be chaotic. I know that. I know it won't be efficient.
No, and it's compounding the reason why insurers don't want to be in this market. They don't want to grow their market share, and they don't want to be responsible for paying out on losses they don't collect premium for that the Fair Plan can't cover.
Exactly.
Yeah. Oh, wow. I mean, it's a big issue, and I don't know what the solution is other than like getting regulation in place that frees up these insurance companies to actually charge what they feel like they need to charge and then move the process forward. Where do you see the state and the federal government kind of having accountability in this process? Because obviously these wildfire severity zones, which my house is in, right, is behind my house is a beautiful national forest that everyone loves. But you look in the forest right now, 2 out of every 10 trees are dead. So should they be taking a more proactive approach to create more defensible space? And would that help?
I mean, I think so. Absolutely. I don't know where the funds or the manpower would come from, but I mean, if you look at what happened with the Caldor fire, that thing raged out of control. I don't know if you guys have driven down 50 and seen how big that fire is and how far it went. But when it got into the Tahoe Basin, where we do have managed forests, that fire laid down. We didn't lose any structures, and they were able to move the fire in the direction they wanted to move it in.
Right.
That's evidence right there that managing a forest works.
Right. So what they should be doing, I think, from a state perspective, is actually heading this out by getting in there and trimming these forests and creating defensible space zones around these high severity fire zones. I mean, you didn't even include Tahoe City in that billion list that you were saying. And, Tahoe City is probably enormous. If you think about I think it's $200 a square foot in the resale market right now, higher than Truckee.
Oh,
Well,
wow.
the thing about Tahoe City is versus Truckee is one of the 96161 is one of the most difficult zip codes to get coverage in, maybe outside of Grass Valley and Nevada City and LA counties. Tahoe City, there's still some capacity. We don't always have to put that with Fair Plan, but in some of those zip codes Grant was mentioning, they are limited to the Fair Plan, and that's probably the exposure the Fair Plan has in those areas that you were quoting, correct?
Mm-hmm. Yeah. So it's a lot. It's a mess. But yeah, I mean that's the thing too, is as you're mentioning the Caldor fire. I mean, thank goodness we didn't lose any homes in Christmas Valley or when it got in it got in the basin. There are significant investments for Cal Fire I've seen. Is the work being done? I don't know. Again, I hear and I see that they're allocating hundreds of millions of dollars here, billions of dollars there, but I don't know if there's a time frame, if that'll start in 3 years, if it's starting now. But even with the Berry Creek fire and back in close to Oroville back in 2020 as well, that was a fire that was being that was a controlled burn, and they let it burn and let it burn and let it burn. All of a sudden the wind came and 1,000 homes burned down. It did not need to happen. So I haven't seen any accountability, and I don't know where our tax dollars are going to fight wildfires. I've heard them talking about it, but I haven't. I live in the Napa area. I haven't seen any controlled burns. I would know, because if I see smoke, my ears go and my nose goes. This is what I do for a living. I don't see a lot going on, unfortunately.
Right. Well, and let's talk about that. Okay, so Tally, from your perspective, someone calls you, says, I have a claim on my house. They now have two separate insurance policies. They have one for all the stuff in the house, which I think is probably easier to handle, and then they have a fire claim that's later on in life. How do you deal with that from an insurance agent perspective? Is that something you help them manage?
So if they have so you're talking about somebody who's got a Cal Fair Plan policy and the companion policy.
Correct.
The Fair Plan does cover all the stuff on the inside. The Fair Plan just covers certain causes of loss. So depending on what causes the loss is going to determine which policy responds. And then we basically determine where the coverage is going to lie. Was it fire? It's going to go to the Fair Plan. Was it a water loss? It's going to go to the companion policy. And we open that claim and we let the claims process begin. And when the client starts having problems, either the adjuster's not getting back to them, or they're only getting half of the estimate that they turned in, or whatever the problem is, that's when we start getting involved and using our relationships with the carrier to help the client get through the claim. But with the Cal Fair Plan, all bets are off. We have no relationship with the Fair Plan. They don't want your business. They don't want a relationship with you. When we have a claim with a Fair Plan, it's going to be incredibly difficult.
Right, Grant. And then this is where Grant would come in, because you run into that difficulty. We call Grant because this is what he does for a living. Grant, explain your side of it.
What I've seen, and this isn't just with Fair Plan, but let's focus on them a little bit more. So when it comes to somebody like Fair Plan, what we've learned very quickly is that the desk adjuster and the independent adjuster that they contract out don't have great communication. We've also figured out that desk adjuster for Fair Plan has no authority. They are taking all commands from the independent adjuster who's there on behalf of Fair Plan. So you're going to have scope of work, which is what needs to be done. There's going to be points of discrepancies there, because we're going to look and say, hey, there's smoke damage in this room, and Fair Plan's the adjuster is going to say there's not. And the desk adjuster, who's never even been to the loss, is going to just agree. So we have to bring out our own experts and really get into the weeds. What I have done, and our team has been doing more often, is completely bypassing the adjuster and the desk adjuster. We engage with them. We immediately start CCing their supervisors. We figured out who they are. And what we've been seeing now is claims aren't taking as long, and we're able to deal with people who actually understand what the policy says. I mean, it's very normal, and I'm sure Tally can speak to this, where let's say on a personal property claim, your house burned down, you have $300,000 worth of contents, clothing, furniture, all of that. We may all agree that there's $300,000 worth of things and belongings in your home, but Fair Plan will just automatically depreciate everything by 50%. So they're going to say, well, we agree it's $300,000. Here's $150,000. If you spend the remaining $150,000, we'll give it to you. Most families in California in a year or 2 year period can't just go out and spend $150,000. Most people don't even have $20,000 in their checking account. So it becomes a hardship for the property owner. So what we try to do is argue down that depreciation. And this is why getting us early in the first few days with the carrier so we can give them proper expectations of the direction we're going. Well, now when it's time to figure out the values, maybe on a $300,000 claim, we've argued depreciation down to 20% instead of 50 or 60%. So now they're getting, you know, 100 and, 240,000, whatever the number is, up front instead of just 150,000. And now it's much more manageable to recover the remaining depreciation. So getting in early for us is more strategic. It's better for the homeowner emotionally, but also it gives Fair Plan or whoever the insurance company is the proper expectations and that they understand the path we're going, and engaging with them up front. It makes for a much smoother and better negotiation and ultimately an outcome for both sides.
Yeah.
So,
and in our last video, we actually covered some of this where we talked about how you get paid through this process. And it is actually like you get paid from the insurance company eventually for negotiating your own fees into the process, correct?
well, what it is it's a return on investment.
Okay.
So our standard fees 10%. It's negotiable, but and I actually have, I could send you all the data I have. We increase claims in terms of recovery for the homeowner by 30 or 40%. And look, on a total loss, let's say it's $1 million. At that point, nobody's the agents and brokers I work with don't care about the loss ratio. They just want their homeowners to be happy, because that's their client. So getting an additional, 200,000 out of their personal property that is legitimate, is fair, works for a lot of people. And here's what I always tell people: insurance companies will never pay you if they didn't think they owed you. So if we come in there and increase the claim by $80,000, it was legitimate if the insurance company pays it. And we've done this with wineries in Napa. We made $1 million difference for Visa Tui, Castello d'Amorosa, the big castle winery.
Okay.
We made $1.2 million difference. And the broker's happy, the owner of the winery is happy. So these are the things we do. But our fee pays for itself in terms of the amount we recover for the property owner.
And Tally, how would you see yourself working with Grant in that scenario?
Oh, I think Grant's invaluable. I mean, we're so pushed past our capacity on just dealing with placing business and underwriting business and helping with changes, that when you have a claim that's difficult to deal with, having a professional like Grant working with you and your client is worth every single penny, because it can literally drive you emotionally and mentally insane trying to work with these insurance companies and the hoops that they put you through. And having a professional like Grant and his company is worth every penny, in my opinion.
And I would say it's also time and place. If there is another wildfire, which there probably will be, I'll probably reach out to Tally and say, what can I be of assistance with, right? There's going to be some who are underinsured because the carrier didn't offer enough. Well, on something like that, I wouldn't get involved because they might recover everything without any help. There might be some who Tally says, you know what? They're right on the line of where they need to be. The carrier might just needs a little push. So maybe I don't get fully involved, but I'm just a silent partner that we don't take a fee. We just write a letter on the homeowner's behalf and get them over the finish line. And then on some, there's going to be some that will need help. So we don't have to be on every claim. There's time and place. And that's where the collaboration and the relationship really solidifies, because again, there's trust. And we try not to get involved on anything where someone's so severely underinsured. We just really try to give them all the right arguments so they can get all of that up front, because we're not going to take a fee on something where someone's going to get. Again, they may need $1 million to rebuild and they only have $500,000 in coverage. We don't provide value there.
And I just want to say to all of you homeowners listening to this, what Grant is saying is true. Most people in Truckee, Tahoe, and resort areas are underinsured. The tools that the insurance industry uses to estimate replacement costs are grossly under actual cost. So pay attention to building costs in your area, take some responsibility, review your coverage limits, and ask your insurance company to increase the rates. And if they refuse to, keep it in writing, because you're going to need it later.
That's right. And, we went through that earlier this year on my house, and I chose to go higher than, what I was told it would cost to rebuild, I think by like almost $300 or $400 a square foot, and that got passed on to me in the policy, right? So I think both of you guys are invaluable for this area and in this ever-changing world. I mean, if Cal Fair Plan is going to go bankrupt with one more fire in one of these areas, what's our solution then? Like, you think about the fact that banks are requiring for mortgages that you have fire insurance. What are people going to do?
Well, a lot of people are, if they are underinsured, they at least are insured for the remaining balance of their mortgage. So there it's a net zero if something were to happen. I do want to comment a little bit about being properly insured. As Tally mentioned, everybody, a lot of people are very underinsured. Here's my method. Tally may have a different one. What I always tell people is you can be properly insured today and underinsured tomorrow. And what I mean by that is don't just look at what you should insure your house for if it were to burn down. Insure your house for what it would cost to rebuild if there was a widespread disaster. Because if Truckee were to burn down, which we don't want, the cost can go from 800 a square at a minimum to over 1,000 overnight because of demand surge.
Right.
And so most policies have an extended replacement cost on top of their base limit, but the base limit should be what you would need just for your home. That additional 50% should come into play for that demand surge. But what I've seen people do to save on premium is they will combine the base limit and the extension to right up to where they need to be. Well, then if there's a widespread disaster, there's that extension has already played into that base limit. You really need to insure your house for what it should be and allow that 50% above, because again, I've seen people who they cannot rebuild. And it's very sad. I meet with homeowners every year who cannot rebuild because they didn't have the right coverage. So again, insure your home for what it would be if there was a widespread disaster, because costs will go up 30 to 50%, especially in the Tahoe area. There's not enough labor. There's not enough materials. There's not enough contractors. You're going to have people from Reno. You're going to have people from Sacramento, from the Bay Area come up to rebuild. The cost of construction will skyrocket in a wildfire situation anywhere in the state.
100%.
That's a conversation I have with my new clients constantly, and you're absolutely right.
Yeah.
And it's a really tough line for homeowners to walk on because, as David knows, the cost is enormous and it's very hard to budget. And it's like, do you overinsure and expect the catastrophic fire to come? Do you walk the line? And it becomes a bottom line budget for a lot of homeowners, that getting your coverage to where it needs to be, which we talk about all the time, becomes so difficult financially for people in these regions.
Oh yeah.
Maybe for the real estate transaction when they're buying the home, get the minimum so you get approved, and then go get the right coverage after the fact.
Yeah. Well, and I mean, it's a tough dialogue, I mean, I'm telling people who are buying, entry-level $1 million homes in the Tahoe City and Lake Tahoe area that, just plan on $1,000 a month is what you're going to be paying in insurance, right? And that's for like, if you have a 2,000 square foot home, you're going to be paying roughly about $1,000 a month for insurance now. If you have, we just had a client that we share in common today, and this is a really interesting thing. The FAIR Plan actually changed the law regarding LLCs. Tally, tell us about that.
Well, so the FAIR Plan has limitations on how much coverage they'll provide. And on a home that is more than $2 million in replacement, you can't really rely on the FAIR Plan for coverage. They will only do up to a $3 million total insured value, which is the sum of all the coverages, not just the dwelling for the house, but personal property, loss of use, building code upgrade, what have you. David and I have a client who has a home that's probably $7 million to replace. And he's insured with the FAIR Plan right now because the non-admitted options for getting him insured to value were close to $100,000 a year in premium. And we ended up placing him with FAIR Plan for $3 million, actual cash value, loss settlement, and he was paying a lot less than that. FAIR Plan changed their rules, and they changed their total insured value limits on their commercial property. And now if you have a home and you're an individual, not a business, but you're insuring that in an LLC name, we can write that on the Fair Plan commercial paper and get the replacement cost coverage from the Fair Plan on their commercial paper if you have your home registered or titled to an LLC.
Now, what's the limit? Don't they go up to like 20 or 26 million now for commercial? What is it?
20 million on commercial. It was
Yeah,
previously 5.6 million.
Yeah, it was just not enough. I was looking at these beautiful homes all over the state where it's like, what do you do if Fair Plan's only 3 million? And then I saw the commercial, it went way up. So they could actually put their home in an LLC.
Correct.
And it
And
just
then we can
basically will
write it on
trigger more
commercial
coverage.
paper.
That's right. So for second homes, this is a good tip, guys. If you're buying a luxury second home in Lake Tahoe, structured as an LLC, helps you with insurance and helps you with other tax savings and benefits too. If you're getting financing on that, chances are pretty good you're going to have to get income or investment financing on that, and that's going to cost you more money, right? So all of this kind of weaves in together of how you put these strategies in this ever-changing world today. And when you consider the fact that, just in building costs alone, we've seen a 40% increase in the past 4 years due to inflation. All of this has to be at the front of your mind every year, and you should be having conversations with your realtors or your trusted advisors for your properties and making sure that the policy gets updated every year if these costs continue to rise.
Yeah.
All right, let's see what other questions I have here. All right. Okay. Give me just other tips that you guys have for each of your industries. Tally, why don't you go first? And let's see here, where are we at time-wise right now? We're at about 20 minutes. So 26 minutes. You have about 2 minutes. Go for it.
So we covered a lot of the tips. You want to do the home hardening. I
Yep.
mean, the LLC name is a good way to get a high value home insured in a high wildfire risk area with the Fair Plan.
Okay.
And just do your defensible space work all the time. Keep up to date on that. And the other really difficult thing with homeowners insurance these days is the age of home. If you have a home that's over 25 years old and you have not had the major systems updated, electricity, plumbing, roof, and heating, you're going to find another barrier to getting home insurance, not just in wildfire areas, anywhere in California.
All right. And that's good tips for sellers too. If you're selling your house, get a lot of that stuff taken care of before you actually put your house on the market, because it's going to actually help you in the sales process. Go ahead, Grant, your final words.
I would say there's a couple things. One, make sure you have adequate law and ordinance coverage, which is code upgrades. Two, other structures in the policy. Everybody thinks that's an outbuilding. It can cover the driveway, fencing, deer fencing. That's a very valuable coverage that you don't want to omit. You want to collect on that in a claim. And three, take pictures or a video of your home outside and inside to capture everything you will need, because at one point you will need to document it. And people will always say, well, if I have a video of all my belongings inside, do I still need you? Yes, because then you will still need to go to pricing departments and get pricing for everything. But this will get you 6 months head start, because typically a recreation on a full loss inventory will take 3 to 5 to 6 months. So if we already have that and could put everything in a spreadsheet, then our internal pricing department will go out and price it. So take ownership of your inventory, get it documented, so that if you ever need assistance, it'll make everybody's life easier.
And store those videos in the cloud of some sort, on your iPhone or on your Android device. What I would say is you should have your fire list ready. So if a fire is coming into your house or your area, you know exactly what you're taking out and you can take it out in 5 minutes. And then I have all of my files backed up to the cloud anyway, so that if my total filing cabinet gets destroyed, I have like all those documents and pertinent documents already in there anyway. So that like if you go to the insurance company at the end of it and you say, this is the TV I bought, all that stuff, all those receipts should just be going into a cloud somewhere to where if you hit that situation, you're prepared and ready. So you guys, thank you so much for taking the time to meet with us today. This is a big topic to cover. If you have any other ideas that you want to share, or, put your comments in down below if you guys have questions. And Grant, I got a call this week from a guy who lost his house, and I sent him to you. And Tally, I'm always sending clients to you. So I so appreciate everything you do for us. And, we'll do another one of these next year and hopefully have another update.
Thanks for having us.
Thank you so much.
You betcha. Thank you. Have a wonderful day.
You too.